AMD crushed revenue this quarter, but there's a twist that could shave future profits. The US and chip makers agreed to give a 15% cut on chips sold to China. I'll tell you how big that could be, what analysts now expect by year-end, and whether AMD's rally still has legs in 3 minutes. Let's go. AMD reported a record second quarter revenue of $7.7 billion, up from $5.4 billion a year ago, surpassing Wall Street's expectations. The growth was broad-based. Data center sales jumped on strong EPYC processor demand, the client segment rebounded sharply as PC shipments recovered, and gaming revenue held firm thanks to steady console demand. Earnings per share came in mixed, beating on an adjusted basis but dipping slightly year-over-year under GAAP accounting, partly due to ongoing investments in AI hardware. Here's the game changer. The US reached an unusual deal requiring NVIDIA and AMD to hand over 15% of revenue from certain AI chip sales to China in exchange for export licenses. In fiscal year 2024, AMD generated $6.2 billion in revenue from China, making up about 24% of total sales. Now the US will claim 15% of that under a new export license deal tied to MI308 chip sales. That's $930 million per year heading to Uncle Sam. Wall Street remains cautiously bullish, but they're watching China closely. Most recent price targets cluster around $180 to $185, implying about 5% to 20% upside from current levels. Here's the breakdown. Recent upgrades in the past 30 days include UBS lifting its target to $210, citing confidence in AI chip growth, and Morgan Stanley moving to $185 with a bullish long-term view. The high-end bulls see AMD hitting that 210 mark if AI, cloud, and data center growth offsets the China revenue cut. Remember, always do your own due diligence before making any investment decisions. This video is for educational purposes only and is not financial advice. Stay informed and invest wisely.